Hey traders, Greg here from Master Trader. For this chart of the week, I thought I would do a shorter review of what we go over in our advisory letter, Swing and Options Trader. Not the trades itself, but kind of the more or less the Techno-Fundamentals part of it, where we go through the intermarket analysis and different sectors and market internals. So what you're looking at here is a screen with interest rates, breadth internals, sentiment internals. As you can see, gold right there, the dollar, oil. Keep an eye on what direction they're going in. That gives us clues as to how that might affect other sectors. For example, oil going down a lot of times will have a positive effect on airlines and other industries. And airlines have been doing quite well lately. But oil may be starting to bottom here. It's on some long-term support. As you can see, as I scroll that over, it's not ready yet. Had a good day on Friday. Gold has been trending up. This is in a long-term position, a relatively long-term position in our ETF letter, electronic funds. We've got quite a few other positions. One of them is corn, semiconductors, Bitcoin. Now the ETF, the GBTC, which we put on this week. But the dollar's been holding up really well, going sideways here. It may break down yet, may break out, but it is tied. All currencies are tied to a certain extent to short-term interest rates. And we use this 13-week Treasury bill yield, and this is how we had a real good idea that the Fed was going to cut half a point the last time. Now, this is from this level where it started to break down. It's down about 3/4 of a point. So at the moment, it's suggested that they'll do 1/4 of a point. And if this continues to drop, well, then we'll lean toward that half a point. We'll see. This I'm not going to cover this 10-year interest rates, 30-year interest rates. These are yield curves. Don't have time to get into all of that. Junk bonds. Junk bonds typically go up when the markets are bullish and down when they're bearish. And over the course of this year, while there's been many up periods, it's been essentially flat all year. So not until the latter part of the year here did institutions really get bullish where they would say, okay, let's put some risk on. We're getting more confident. At the end of last week, during last week, they got super confident. And this was after the Fed cut the week before, and now sentiment internals are into a bearish extreme, saying, be careful. Breadth has deteriorated a bit, but that's normal when the candles get real tiny and small like that and overlapping. But these sentiment internals are telling us, be cautious. And on Friday, the volatility index popped up a little bit. Not a big deal initially, but last time it popped up a bit, we had a down move. Now, this is just the start, but it's down where the last pop-up started. So we take note of that. See if that keeps moving up. These are advancers minus decliners. We keep an eye on that intraday as well the end of the day to see if it's at an extreme intraday. Is it above 1,000 or above 1,500? That leans us more toward our intraday trade, staying on the long side, and if it's down below 1,000 minus 1,500 on the short side. All right, some sectors. So this is another one of our screens, different platform, top-down approach, S&P sectors. This looks at equally weighted. This is a whole lot of ETFs that we monitor, and this is subsectors, which breaks down these more diverse sectors here. And so your S&P spider sectors are much more diverse, where these are more concentrated. For example, I click on this, and we're going to be looking at gambling. But when I want to look at gambling, maybe I want to look at gambling stocks. So it loads gambling stocks in here. So within here, I could say, well, what was the strongest on the week? Click that. Strongest on the week was DraftKings. Maybe it'll be ready for a turn at the 200 MA And it came nicely off of the low, maybe a little consolidation, and we can then go through here. But I could also scan and look for whether a big volume spike. So there's a little thing that measures volume spikes here, and that's a good thing because when it broke out above that consolidation, there was a big volume spike. So there was institutional participation on that. That's a good sign. Sometimes prices go down and you get volume spikes, and that's a capitulation type of a move. We could sort this by what is done the worst on the week, and we see Light and Wonder. Never seen that before, but that gap down in big volume, pretty bad. Materials, excuse my voice there, did great on the China news, and so copper went up. What else went up? Metals went up, steel went up, chemicals went up, and in addition, there were some nice movements in. Well, there's copper stock, but in here, consumer discretionary, things that people want to do that they don't necessarily need. Gambling, right? China's going to be doing better. People feel good. Go spend some savings and enjoy a casino. That moved up nicely. LVS moved up nicely. So as you can see here, we can sort through different sectors like technology. Here I was talking with our subscribers about not trend lines, but about the highs getting lower and the lows getting higher and condensing, looking for a breakout, looking for this to continue to go higher. All right, we'll see how this holds up. Semiconductors, you can see here, it's got a bearish wide range bar, which was on Friday. So we can look for many, many things in this layout that we've set up and share with our subscribers to be able to do the same thing that I do here. Finding out where money is flowing into, where money is flowing out of, what's showing relative strength, what's showing relative weakness. For example, solar, which has been hated, right, for a long time, showed a little relative strength last week, but who cares? It's up against resistance, and we're not ready for this yet. So I hope this helps. If you become a subscriber or a student, this is something we'll share with you. If you have questions, email me, Greg at Master Trade.